Hey guys, Bill Soriano here from Pittsburgh, and just see something here. And I wanted to come on today, do a quick video about Sniper Pro. As you know, earlier this week I created the overview video here for Sniper Pro. I created my PDF file that you can access here with my overview video showing you how we use the Sniper Pro scanner. And I also posted the 3 training PDF files here for you as well. Now, keep in mind, though, that, although it's free to access my PDF here, watch the video, look at the PDFs, you can't get to the live training and you can't get to recorded trading or the live trading or access to the scanner until you join us in GFood. So once you go through this, once you watch my videos, if you like them, you know, first of all, subscribe, comment, like the video, but also, ask me for the link to GFoo so that we can get you started here. They offer a 7-day money back guarantee. You'll get access to everything that they have. You get access to all 6 of their live academies, all 8 scanners that we have right now, and also the travel portal, all for one price. So get with me for that. And before I move on, let me make sure that I mention that I'm not an investment advisor. I'm not qualified to give you investment advice. What I share with you in my videos and PDF files is for educational purposes only. Forex is a risky business. You can lose all or part of your capital, which is why you should always, especially if you're a beginner or even an intermediate trader, if you're a beginner, you should always be trading on demo until you have a strategy that works. Same thing if you're an intermediate or even an advanced trader. If you're starting a new strategy like a scanner here, then you need to trade that on demo. Past performance never equals future profits. So keep that in mind as well. Anyway, this is the PDF that I created with my overview video showing you. Basically, I just go through the 3 training PDFs that they give you in the back office and show you how to use the scanner. But now I want to give you a little more information because some of the stuff gets updated, once you watch the additional videos that they send out. So, the first thing I want to mention, guys, is that it's so important that a strategy is as close to 100% objective as you can make it. That's why I like sharing my damn near 100% objective 4-hour supply and demand trade plan, because it's damn near 100% objective. And you can't get them 100%, but you got to get them damn near 100%, as I like to say. And so, there's a way that you can use this scanner and this strategy to get it to where it's very, very little subjectivity involved. And that's what I try to show people. You know, uh, I did videos for the Golden Era scanner. I finished that up last night. I did a video last night. I still got to post that onto the PDF. But that's pretty much a 100% um, objective strategy. Okay. But there could be some other ways to use it as well. So I may get back to that later on after I go through the other scanners here and show you them. But this is the Sniper Pro, and let's just look at a current. So we're here in the back office. We select Sniper Pro, and so if you guys know, first thing I want to say is, let me just pull up. The first thing they tell you, in the PDFs is that this is for novices and experts as well. Okay. And it could be for novices. I'm going to show you a way that it can be, but the way that they do the training, it really doesn't look like it, because they tell you it's for novices, but then what they do is they show you these 3 Sniper Pro setups, and you have to try to determine which one you're looking at. And this is something that a novice isn't going to be able to do, and not even an intermediate trader. Some intermediate traders will struggle with determining consolidations, trends, and reversals. Okay. And it's kind of an an unintended consequence, I guess, is what it is. They wanted to show you these three different snipes or these three different setups, but the issue is that two of these setups, the trend snipe and the reversal snipe, are no different. You trade them all the same way. And the only difference with the side snipe is that instead of trading from the zone that the scanner gives you, you know, the proprietary Bollinger Bands that they give you, they tell you you have to be at the extreme high or the extreme low of the consolidation, which makes sense. But the problem is novice trainers aren't going to be able to determine this. So the easiest thing to do is just leave the side snipe out. Even though they say that's the easiest one, it's really not. So I don't know why they say that, because, you know, determining consolidations is one of the biggest things people struggle with, because most trading strategies tell you that they don't work when the pair or the whatever it is, gold or indexes, whatever you're trading, the strategy normally doesn't work when price is consolidating. And that's where people get most of their losses, because they can't determine that there's actually a consolidation. And even this right here, you know, it could be determined not a consolidation here. It's moving back up. It's hard to determine that. But the scanner gives you a solution. The scanner gives you what it calls the trend screener. Okay. And then they give you this wonderful indicator on the scanner. And then they tell you that it's not really used to determine whether or not to take the trade. So I don't get that at all. But again, I didn't create this thing. I'm just trying to help you use it. Okay. And that's why I'm making this update video. So the easiest thing to do, guys, is it says, you know, it determines the trend direction. It determines the trend state. Is it trending, consolidating, or pulling back? Well, okay. If it's consolidating, we know let's just stay out of that trade. Okay. And then it gives you a strength, ranging from very strong to very weak. Then it tells you, hey, if you're looking for trend setups, you should have a neutral strength, right? It could be bullish or bearish, right? And that's the way you want to go. But it should have neutral strength, and it should either be trending or pulling back. So if it's bullish and neutral and trending and pulling back, you would look to buy. If it's bearish and neutral and trending or pulling back, you would look to sell. Then it tells you about the reversal setups, and that's when it's either bullish or bearish, but it's very weak or weak, and it's pulling back. See? So that's telling you that it's getting ready to reverse, right? So if you have a bullish indication on the chart, but the strength is weak or very weak and it's pulling back, okay, you would actually look to sell that, okay? And it's basically the same thing with the exhaustion setup. The exhaustion setup means that the trend is very strong and it's trending. So that tells you that it's due to pull back. And so you don't want to go with the trend that the screener is showing you. You want to go against the trend. So in two of these situations, you want to trade against the trend that the screener is showing you. And then with the trend setup, you want to trade with the trend. Okay. So the screener is an excellent tool for you to use to determine what to do here. So let me just show you. If we go to the scanner right now, okay, when you go to a pair, and we're on Forex pairs here, where this is well, actually this is, I'm sorry, this is an index. This is NAS 100. Okay. And I pulled this up because there was an active signal on here. We see our scorecard, but more importantly, guys, in addition to the scorecard, we have a super sniper arrow. So this is a double confirmation, because you have a scorecard, a +4, which is pretty good. +3 is the lowest. Remember, they changed the system to where +3 is the lowest, +10 is the highest. So you won't see the +1s or +2s anymore. This has a super sniper with a volume of 88.4%, which is very good. It also has a regular sniper arrow as well. And we have a gray candle with the blue sniper line behind it. Okay. So again, this indicator, when the scorecard comes out, And remember that in order for a scorecard to come out, price has to be either inside or has gone through the Bollinger Band, right? Okay, and that clearly has done that. Now, the other thing we need here, guys, is we also need for price to be in a key zone. Okay, and here's our key zone. And I really wish there was a way for me to change the background in this scanner to white because it's really hard to see these key zones. See how it's like a bluish color and it's a reddish color up here. But what they give you is they give you these dashed lines in the middle of the zone, and that's how you could see them better. So if we scroll, if we kind of squeeze this up here, we could see more of them, right? And then we also have our pivot points over here. So we like to line up our key zone. We like price to have come into our key zone, either be there or have gone into there, right, before making the move. And we also want these pivot points inside that zone as well. And we don't really have that here. Okay, we don't really have that here. Now, the other thing we like to do is we like to scroll back and look in price action and see, hey, was this area former support or resistance? And yeah, it was back here. So we can see it served as support back here as well. So we do have the price action, but we don't have the key level and we don't have the pivot point, but we have the price action. We have not only the scorecard, we also have a super sniper arrow, and we have a sniper arrow as well. Now let's look at the Sniperator just to see what that's telling us here. So if you look down here at the Sniperator, and I got this scrunched up for some reason here, I gotta see if I can get this. Okay, I don't really. So we see that we have the cloud here, the blue cloud. We do have a dot right here. We have a crossover dot, but our trend direction is telling us we're bearish. But there's a reason for that, guys. The reason for that is if you look at the screener up here, it tells you this is bearish, but it also tells you it's trending and very strong. So what does that mean? Right? If it's trending and very strong, then that means it's an exhaustion setup. So that tells us that we probably want to trade this the other way. And it also tells us that more than likely that trend is going to be going the other way, right? So you have to kind of put all these things together. You have to say, hey, I got the scorecard here, right? I got a super sniper, a sniper arrow. I got a gray candle, right, with a blue sniper line behind it. And you could see here that it's telling you now to wait for price to move back. So the way it gives you these trades here, and this, is it gives you an FVG. It gives you a fair value gap to enter on. Now, that's not actually where the FVG is at, right? That's not actually where the imbalance is at. The imbalance is kind of from this wick to this wick, but this is the zone it tells you to enter in, and it wants you to enter at the halfway point of the zone. That's the way the scanner is best set up. But there's three ways you can enter trades, obviously. You can just enter the trade when your scorecard candle closes, okay? The other way is you can use the zone. You can use the beginning of the zone, or you can use the midpoint of the zone. Now, the reason why you want to use the midpoint of the zone maybe is because you have a better risk to reward. So you see here, if you wait for price to move back to the midpoint of that zone, and we put our stop loss right at the red line, and we go to take profit 2, we can see that we have a 1 to 2 risk to reward on this. Now, it's very important to know that if you're trading gold, if you're trading Bitcoin, any crypto, you're trading gold, you're trading any indices like the NAS 100 here or the Standard and Poor, whatever, that the risk to reward is going to be a 1-to-1 at take profit 1 and a 1-to-2 at take profit 2. And that's if you use the midpoint of the box. Now, if you don't use the midpoint of the box, if you use the beginning of the box, then that changes to a 1 to 1.62 risk to reward. And if you use the close of the candle now, you're not even getting a 1-to-1 at take profit 2. And so this is why you want to enter the trade when possible at the midpoint of the zone. Now, the other thing you could do is you can use the beginning of this next zone up here as your target, but that's only a little bit further away. So that really only gives you still not a 1-to-1 if you enter at the close of the candle. So really what they want you to do is they want you to wait for it to pull back to the halfway point in the zone, and then that's where you set your limit order, or that's where you market execute if you're watching the trade play out. Now, again, if you're trading crypto like Bitcoin, or if you're trading gold, or if you're trading the indices, this risk to reward will be a 1-to-1 and a 1-to-2. If you're trading Forex pairs, which I'll show you in a second here, then it's going to be a 1-to-1.5 and a 1-to-3. Okay, so you can get more of a better risk to reward on Forex pairs using this scanner than you will trading gold or crypto or indices. Okay. So keep that in mind. So this is a trade right here, right? And you can see that price is moving up to take profit 2. But again, if we were waiting for price to pull back to the zone, we would have not gotten in this trade. Now, let me just show you over here to the left here, you have, where you could set your time, but it seems like you have to do this every time you log in. So I'm just leaving it alone. This scanner seems to go to the 15-minute by default, and that's where I would want to use it. I would want to either use it on the 15-minute or the 1 hour. I wouldn't use it lower than that. I wouldn't use it higher than that. But again, it's up to you how you like to trade. Now, if you click here, you can see this gives you the crypto symbols. If you click here, you get all the Forex pairs. If you click here, you get the indices, right? The NAS 100, US 30, Standard & Poor's 500. And if you click here, you get oil, crude oil, gold, platinum, silver, right? The metals, whatever you call them. Commodities, whatever you want to call them. So let me just see if I could find a pair that's giving us a recent signal here in Forex. So I'm just going to start at the top here, see what we get. Okay, so we have something here. This is AUDCAD, so let's make this bigger. Okay, well, the first thing we see is this. Let's look at this. Let's say, okay, we go to the trend screen. Okay, so this is a sell, right? This was a sell. And by the way, this has a gold candle with a super sniper arrow, which again is a double confirmation. The only issue with this is that the scorecard candle is the candle before it. But since you get this gold candle here, that's kind of like, again, an extra confirmation, right? You have the scorecard and you have a gold candle with the super sniper. The gold candle tells you there's a lot of momentum in the move, right? It's usually reversing direction. So again, this is bearish and this is trending, but it's neutral. So that tells us what? Again, if we go back to our PDFs that they give us, the trend screener tells us that if the trend is neutral and trending or pulling back, that it's a trend setup. So what that means, guys, is that we would want to take a bearish trade on this pair. We would not look for a bullish signal. So if we got a blue scorecard down at the bottom here with this bearish trending neutral screener, we would not take the trade. We would not look to take the trade. So let's just expand this and let's see if we can validate this scorecard to see if this would be a trade that we would want to take. And you could see that once that scorecard comes out, that means it's definitely in the Bollinger Bands or through the Bollinger Bands. So you don't have to worry about checking for that. Okay. And again, we have not only the scorecard candle, but we have a gold candle right after it with the super sniper arrow, right? So again, we don't, price really didn't make it into our key zone here. So our key zone is right up here, and price really didn't make it into there. And price, it did make it to this pivot point right here. So we have a pivot point, right? We have the scorecard, which is a +3. That's the lowest score you can get. So it's not a great score, but it is a +3. We have a very high super sniper arrow with a 98.7 volume, and we have the gold candle. Okay, now if we look at the snipulator, we have more confirmations here, right? We have price at the bearish retest. We also have the blue crossover dots, which is a double confirmation. And we have the trend bearish. So with all that, guys, this is probably a trade that I would want to take. Okay, now again, there's 3 ways you can enter the trade. You could have entered here at the close of this candle, which wasn't a bad place to enter because it was very close to the zone that the scanner is giving you. Okay, now here's our invalidation line, and here's our 2 take profits. Now remember, with Forex pairs, these take profit 1 will be a 1 to 1.5. Take profit 2 will be a 1 to 2 if you enter at the midway point of the zone. Okay, if you don't enter at the midway point of the zone, then that will not be the case. So let's just grab our short tool here for a second. Let's say we enter at the midpoint of the zone, which again, price has not come back to. We put our stop loss there. So again, if we go to take profit 1, that's basically a 1 to 1.5, and take profit 2 should be a 1 to 3. Okay. So that's how it is with Forex pairs. Now again, if we enter at the close of this candle, then this is only a 1 to 1.216. Okay. It's a 1 to 216. Now, I would tell you, in my opinion, you shouldn't take any trade that doesn't give you at least a 1 to 2 risk to reward. So if I would look at the close of this candle and I would see that I can get at least a 1 to 2 on this trade, I would enter the trade at the close of that candle. Now you have to do that pretty quickly, right? Because you have to wait for it to close. But that would be a time that you wouldn't need to use the midpoint of the zone that the scanner gives you. And again, if we use the zone, but we use just the beginning of the zone, then that's a 1 to 2.7. So if you use the midway point on this particular trade, you can get a 1 to 3 at take profit 2. If you use the beginning of the zone, you get about a 1 to 2.7. And if you use the close of the scorecard candle, you get a 1 to 2.16. So it works out for you. Now, again, keep in mind, price did not move into our key zone. Remember, our key zones are based on what? Our key zones are based on the whole half quarter number theory, right? These are dynamic support and resistance areas. They're psychological areas based on the whole half and quarter number theory. Okay. Now your pivot points, they're based off of the prior day's high, low, and close. Okay. So we don't have the key zone. We do have a pivot point, right? But more importantly, we have a scorecard candle here. Now, if we get in at the close of that candle, we're not going to know that we have a gold candle with a super sniper arrow. We're already going to be in the trade. But because our sniper later is giving us all four confirmations, right? It's telling us that we have a bearish retest. It's giving us a crossover red dot, which is a double confirmation. We also have the fishtail here, right prior to this. The shaded area, that's called a fishtail. And you have the trend going down, okay? And that's important in this one because we're trading with the trend. Now, if we're going to trade against the trend, we're not really worried about that, right? If we're taking a reversal or an exhaustion setup and we're going against the trend that's showing up here, then why would we worry about that? So you have to kind of look at it and determine what's the best way for you to use this scanner. Okay, now again, you can't even get access to it if you're not a member of GFU and you're not a member of our community, so you can't even start playing around with it. And we do give you a 7-day money back guarantee. So anyway, let's see if we can find another pair. I'm going to pause the video for a second just to scroll through so I don't keep you on here with me too long, because I know that attention spans do not last that long. Okay, guys, I did find another one for you. So very quickly here, AUDJPY. This will probably be the last one I go over. Now, again, what do we want to look at first? We want to look at this trend screener first. It says it's bearish, okay? But it also says that it's trending and very strongly trending. So that tells us what? That tells us that this is, again, if we go back to our PDF here, that tells us that it's an exhaustion setup. And if we're trading an exhaustion setup, that means that we want to go against whatever's showing here as a trend. Okay. So that's the first thing. But if you look here now, here's a new scorecard down here, and it's blue, right? So whenever there's setups in the market, the scanner will show you the last two scorecards. That's all you'll see. You'll see the last two scorecards. Okay. Now, actually, that did make a pretty good move down, right? But let's expand this for a second because it's trending and very strong and bearish. We would rather trade a reversal here because this is an exhaustion setup, like I said. So we want to look at this +4 down here. Okay. We want to look at this +4. Okay, so we got our +4 here. Okay, so by the way, when you look at this +5 here, right, you did have a red bearish retest, right? But the trend was actually bullish on that. Now let's look over here. So again, what do we have here? We have diversions. So real-time diversions. This is one of the few scanners that will give you real-time diversions, right? So that's a good sign there. That's telling us the price is doing one thing, but the oscillator is doing something else. So the price may be making new lows, but the oscillator is not. Or the price may be making new highs, but the oscillator is not. Okay, or vice versa. There's some kind of diversions, okay? And that's always a good thing, okay? Now, the first thing we see here, we see a super sniper arrow, and then 3 candles later, we get the scorecard candle, which is a +4, and it's a gray candle, okay? And then the next candle comes right back into the zone, okay? Now, we're looking at the thing here. We see that the sniper later is red, the trend is red. There hasn't been a bullish retest yet, but there is divergence. Okay, there is divergence. So, again, this may be a trade that you would decide to take because if you are going against the trend, it's a counter trend trade, you know, the sniper later line and the trend may not line up for you. But because you have this divergence here, this may be a single reason alone to take the trade. Again, it'll be up to each individual to develop a trading plan to use with this scanner, but that could be a reason to take this trade. And again, you could see here that if we set up this buy, right, if we use the midpoint of the zone, stop loss goes at the red line there. And then, of course, the first take profit is a 1 to 1.5. The second one should be a 1 to 3. Okay? Now, if we use the beginning of the zone to get in instead, it's a 1 to 2.42. And if we use the close of the scorecard candle, it would be a 1 to 1.88. So we would not want to take that because it's not at least a 1 to 2. So we would need to wait for the pullback into the zone, which we get here, by the way. And so this is actually an active trade right here. Okay, and I do want to take a image of this so I have it. So just bear with me for a second here. Save this real fast, guys. Okay, but again, let's keep in mind, right? We're not really, we're kind of in a key zone here, right? Uh, and we kind of have a pivot point as well. So this may be a trade you want to take. So let's see if we can find one more here for you. Okay, guys, I did find you actually a reversal setup, and this is right now in GBP AUD. Okay, and again, so what's the screener telling us? The screener is telling us the trend is bullish. However, it's pulling back and it's weak. So again, let's look at our trend screener here, and if it's very weak or weak and pulling back, that's a reversal setup. So we're going to look for a sell in this market, okay? And we did get a +4 scorecard here, right? And so we get the super sniper arrow, the next candle, but that really doesn't help us with the trade because we would already have to make a decision or not. And let's just make this bigger here. And let's see if we can validate, if we can get enough confirmations to validate this setup, because we could see that price obviously moved all the way through it, right? And you just get a see if I can get a picture of this. Okay, so I got that. So let's look at this now. Okay, we have a +4, right? Price came into a key zone, right? See that key zone there? We also have a pivot point, an R1 pivot in that zone. So again, all good stuff, right? If we scroll back, we could see that this zone has been resistance in the past. So we have a couple points there that we can put out. So we have price action, right? We have our scorecard. We have our key zone. We have our pivot point. We have our price action, right? We have everything we need. Now let's look at the Snipulator. Well, the Snipulator is giving us some mixed signals, but again, this is a counter trend trade, right? The trend is bullish up at the top, but since it's pulling back and weak, we want to go short on this pair right now. Okay. So we have a couple different things. We have a bearish retest, but the Snipulator line is blue and the trend direction is blue as well. But we can expect that, right? Because we're trading against the trend. But what do we have here? Right on that candle, right before that candle, we get real-time diversions. And guys, that's what would tell me to take that trade. Okay. Everything. I got all the confirmations up here. And once I see this divergence here with this bearish retest, I'm going to be good to go. Right? If I can get 2 out of the 4 down here and 2 out of the whatever, 2 out of 4 up here, I think that's a pretty good confirmation. Now you can see here, the price just makes a huge move down. So again, if we set this up for you just one more time, I'm going to show you short position tool. If we use the halfway point in the zone, let's see. If we would use the halfway point of the zone, we don't get in the trade, right? So this is the problem. This is the problem with using the halfway point. But again, there are a couple reasons not to use this halfway point or not to use this zone at all and just use the close of the scorecard candle. The first reason is there's no imbalance. You can see that this price action here is all efficient. There's no imbalance here. So if there's no imbalance, that means there's no reason for price to come back to that zone. And as such, it just keeps going. Now, so if you get in though at the close of this candle, your stop loss goes right there. Of course, what happens is your 1 to 2, your take profit 2 is only a 1 to 2.2, 1.22 or 1 to 1.16 risk to reward. Okay. So it's just not a good risk to reward. Okay. But sometimes what you can do in this situation is you can use the next zone, the next key level, which is down here. Now that gives you a 1 to 2.5. And it hits that. Okay. So I hope this video has been helpful to you guys. I'm obviously going to make more videos coming up this week here, maybe over the weekend. And definitely next week, I'll be making more videos showing you this scanner in action. But this Sniper Pro scanner, it has a lot of moving parts to it. And so that's why this video is a little long. But again, guys, if you like my videos, please subscribe to the channel. That really helps out. You know, like the video, comment 100% down below if you watch the whole thing here. If you need the link to sign up for GFU, let me know. I'll send you that link. And till next time, guys, have a great day. And have a great day.